Hello traders, welcome to our class on long options. I am Rachel Deschelle, your host for this webcast and Senior Manager of Trading Services here at Schwab. I am joined in the chat today with my buddy Kevin Horner. Please chat in your questions, comments, requests during our session today. And please give us both a follow on X. He is Kevin Horner CS. I am Rachel CS. We post a lot of charts, a lot of updates and ideas there. And please like this video and subscribe to our channel, Trader Talk Schwab Coaching here on YouTube. Now, get ready to leap for joy, because we're covering leaps today, you guys. So this was backed by popular demand. You guys have came up to me at the trading workshops, contacted me on X and through the survey, and it seems like the majority of you want more discussions on leaps. So we're gonna go through a couple examples today, talk about leaps at length. And before we get started with that, let's get into our important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information we're going to cover is for general informational and educational purposes only, should not be considered any type of recommendation or advice. And we're going to cover the paper money software application. Keep in mind that there are some differences between paper and live. Now, before we get into the agenda, the upcoming workshops and market drives. We have one actually this weekend in Denver. I will be there. I'm going to join Kevin. He's over there in Denver as well. So come say hi to us there. We have advanced option strategies coming up in Dallas next month. Same with Boston as well. I'll be at that one too. So if you're there, come say hi. Now, as far as our agenda today, we're going to start with our market overview like we always do, review old trades, and then get into the meat of the discussion, which is discussing the concept of long options and price, time, and volatility. And then we're going to place those example trades on the paper money platform. So let's get into Thinkorswim and start with our market overview. Things have been a little spicy in the markets recently. We've had some tweets that came out that moved the market a little bit, but we are still hanging out below the 200-day moving average and still above this level of horizontal support around 65.50. So that's really that zone around there. It's not a perfect straight line, but definitely a horizontal zone that's been touched quite a few times as this possible rounding top formation continues to really close out here. So all eyes are going to be really on this zone right around this 65.50 where we're trading right now. If we break down further and break the lows from last week, traders will likely be looking at a couple levels to the downside. One of them being this zone right around 63.50 or so. We can see that there was a couple lows that were touched before then. Notice there are no other real technical levels in between where we're currently at support in this next lower level. And then after that, you're probably going to see, if that level breaks, you're probably going to see this other zone to the downside right around 6,200 or so. So only if this breaks, keep an eye on some of these levels. Those will be the ones that traders will be watching for downside. Now, they're only a few percentage points away. We're still roughly about 5 to 6% off of the all-time highs. So keep that in mind as well. Okay, going back to our old trades, we got stopped out of a couple of them last week. We placed some trades on volatility squeezes, price squeezes. We got stopped out of SMCI. We got stopped out of Rocket Lab. We're still in Oklo for now. That's the only one that didn't make a major move. And then we are still in our Halliburton leaps position as well for there. So that's kind of what we have for our existing positions. Now, as far as just kind of getting into discussing leaps, since that is the topic of our discussion today, well, let's just start with what are leaps. Then we can get into the pros and cons. Then we can get into how to search for possible fundamental and technical setups and leaps. And then we'll go through some trades with leap options as well. So as we get talking, I'm going to pull up this document so I can take notes for you guys. You guys can take notes with me as we go through our discussion today. But essentially they're leaps for short, but they're essentially long-term equity anticipation securities. So these are regular options with a year or more until expiration. And so when you are looking to buy a leap option, because typically when we're looking a year or longer, we're typically looking to be buyers, not sellers. So typically leaps, when investors buy those, they're taking a long-term bullish bias in the stock or in the market overall, depending on what they are buying as far as the call options there. Now, in this class, we do talk a lot about short-term trades, swing trades, momentum trades, trend trades. Those are all kind of in the camp of more short-term and more intermediate term. I want us today to basically put on the hat of a long-term investor, because essentially that is what we're doing with a leap option, is we are looking for that long-term upside growth, upside momentum, upside trend in both the fundamentals and the technicals of an underlying stock. Now, essentially with leap options, let's go through a couple different pros with leap options, because there's benefits and of course there's downsides with anything. There's always pros and cons. So the great thing about leap options is that you have more time for an asset to move in your desired direction. And so essentially, instead of just taking a really short-term trade where the stock has to make a certain move by a certain date, you're buying yourself more time with this. So I'm going to say more time to move in desired direction, okay? So that's obviously a huge one. Another major one, this is probably like the number one pro of leap options, is essentially you can control a larger position in the underlying stock with much less capital. So they're very capital efficient. Instead of putting up $20,000 for a stock position to control 100 shares, you may be only putting up $2,000. So they're a lot more capital efficient. So you can essentially just, control that larger position there. Okay, so I'm going to write this as we go. Now, the next one is over the long term, you're going to be holding this option through many different news events, different types of announcements, Fed announcements, earnings announcements, things like that. So over the long term, volatility won't impact it as much. So you don't have to focus entirely on, hey, when's the next earnings? What is the current level of implied volatility? Things like that. It's not going to play as much of a factor. Obviously, we kind of want to avoid buying at the time where implied volatility is at the highest levels. But if it's a little elevated, that is okay, because over the year, over the long term that you're going to hold it, volatility levels will fluctuate over time. So I'm going to put that as less impacts with volatility. Okay. And we're just going to put implied volatility. Okay. And then another one is that these are less sensitive to time decay. So you'll notice when we look at these options on the option chain, you will see that the time decay or the theta is very, very small in longer term options, because we've talked a lot about in this class about how time decay really kicks into high gear around that month to month and a half mark. So that like 30 to 45 day mark, usually within that zone or so. Time decay really kicks into high gear the closer and closer it gets to expiration. So the further you go out in time, you're obviously out on the other side of the curve. You're seeing very, very little decay on your options. So that's another huge benefit of just having a lot more time on your side. And that kind of goes a little hand in hand with this one. You have more time for it to move in your desired direction without seeing a ton of decay on that option there. Now let's look at some of the cons. Okay. Because there are a few cons here with LEAP options. So one of them being they are very pricey. They are very expensive compared to short-term options. So I'm just going to put pricey, expensive. And that's just because you have so much time value, you have so much of a type of possibility that the stock could move in a much greater fashion over a larger period of time than you do of a shorter period of time. So that's all going to be wrapped up into the price with that extrinsic value there. Another one is you don't have any shareholder rights. So, and that kind of goes with no dividends as well, just a couple components of, hey, you do have that long stock exposure through this LEAP option essentially, but the thing that you're missing is because you're not holding the underlying shares, you don't have shareholder rights and you will not be entitled to any dividends. So you won't be able to vote, you won't be able to collect income on these unless you sell a nearer term option to maybe pay for the LEAP. And I saw someone mention diagonals in the chat, so maybe that's something where you'd be looking for if you're looking for a little bit of income, looking to finance that long dated call. We don't talk about these that type of strategy in this class, but check out our channel. We definitely have quite a bit of webcasts over diagonals and calendars as well. But the next one would be lower liquidity. So you'll notice in the monthly options specifically and the options closer to expiration, you're going to have a lot more liquidity in those. And the reason why is because essentially they are cheaper options. So people are looking to be a little bit more tactical, catch those shorter term opportunities rather than being a little bit more long-term using the options, because typically when you're going that far out, it's typically one type of strategy you're employing or just a couple different strategies, whereas with the shorter term options, there's a multitude of strategies there that you could work with. So you're going to see sometimes wider spreads, lower liquidity. So we do have to be a little bit more careful when we screen for these types of opportunities, because we need to not only look at the fundamentals and the technicals, but we also need to look to make sure the landscape for the options is attractive for us to buy a LEAP option. And then the other con is availability. So LEAPs are not available for every type of optionable stock or index. You're typically going to see them offered on the more liquid stocks, so the stocks that have more activity in the underlying, more activity in the options, but you will not always see LEAPs offered. So keep that in mind as well. That is one of the cons. So if you are long-term bullish and you want to buy a LEAP option, yes, it is unfortunate when they don't offer LEAP options. I have seen that myself. So these are just kind of some of the benefits, some of the downsides to LEAP options, and we'll kind of take this all together as we dive in and look at some examples. Now we're going to focus on creating a scan for LEAP options, and We're going to focus a lot on both the fundamental and the technical, since with leap options, fundamentals have a much higher factor because you're holding them long term. So the fundamentals, the earnings growth, things like that are going to matter a lot more over the long term than they would if you were just taking a short term swing trade here. Also keep in mind, with lower liquidity, you're also going to see less open interest with those as well, I guess. So that's something else I should mention. And then I see a couple questions in the chat too, so I want to address a couple of those. So I had a question on the term long options and leaps are used interchangeably, or are there differences? So long options, when we say you're going long an option or we talk about long options, we're just saying you're buying an option. So that can be short term, long term, intermediate term, whatever that is. So a long option is just buying options. Short options or just selling options. So when you hear long or short, that's not necessarily meant to parallel with the time frame. It's more of whether you're going long or short. So you're buying or selling. So let's say with leaps, yeah, you're typically investors are and traders are buying leaps because typically those conditions aren't favorable for selling options. So you're buying options in that sense, but those two terms are not interchangeable. Okay, let's see here. Okay, couple other questions. Laura asked a question with the elevated VIX. Isn't this an unfavorable time for purchasing leaps? Not exactly. So I would definitely take a look at the underlying stock that you are looking to buy a leap on, because it's all going to come down to that underlying stock that you're trading the options on. Now, we know that the current market environment, we know that we've slid a little bit off of our highs. We know that there's definitely some rotation happening under the surface. There's a little bit of weak breadth. So there's a few signals that are kind of giving us this market environment that is a little bit more mixed. But essentially we are still in a bull market. And so if you're buying leaps, you're still taking a direction, a long-term bullish stance. And so essentially you're just aligning your point with the view of the market of essentially staying invested rather than short-term trading some of these swings. Now, if you were short-term trading, there would be other things we would consider, like position size in this type of environment, maybe taking gains a little bit sooner, things like that. But with the current market environment, there is still opportunities to find for leap options. There are still sectors that are going up. There are still companies with strong fundamentals. We are not at a capitulation stage in the market right now. So hopefully that answers your question there. Okay, let's see if we have any other ones. Okay. Maximum number of days to do a reasonable leap option. So leap options are just a year longer. It really depends on your time horizon. So that is the best way I'll answer that one there. Now let's get into the scan. Since we talked about combining the fundamentals and the technicals, let's build this scan. And I want you guys to keep in mind, we're going to use some study filters here in this one. So if you are in your paper money Thinkorswim account, keep in mind that in paper money, you're not going to see study filters. So you may want to use this one in live as we build this together, and I'll share this scan with you guys as well. So let's just start in all listed stocks. We're starting with a basic stock criteria of looking at a stock that's $20 or more. We don't want to trade a low price stock there. And if we add another filter, we're going to look at fundamentals, and we're going to look at earnings per share. So we're going to just look at positive earnings per share. So we're going to say anything with positive earnings. Most likely we would want to look for a stock that's growing their earnings, because earnings growth tends to go hand in hand with overall price growth as well. So we're just going to put this filter in that's going to narrow down quite a bit of just positive earnings, since there are a lot of stocks out there that do have negative earnings. We are going to add another filter for the fundamentals, and we are going to look at return on equity. So let's look at this one, our ROE. We'll use the current and we will say 10. And the reason why we're doing this, this one basically takes the net income divided by the shareholders' equity, and essentially it's used to just compare a company's profitability over time or against its competitors. So essentially a higher ROE is just going to essentially tell us that this company is better at using its equity to generate profits. So we're going to use 10 as our measure here on this one. And then let's add our couple study filters here too. So we're going to go to study. We always talk about liquidity. So let's look at an average level volume. We're just going to say the 50-day average is greater than 2 million. Because hopefully we'll filter out some of those stocks that have thin options if we look for stocks that have that volume over 2 million shares traded. And then let's go to our last one here to look for stocks in a long-term and intermediate term uptrend, because we know right now there is a lot of deterioration under the surface. We have less than 50% of stocks above their 200-day and above their 50-day. So we want to find a stock that is still resilient, technically speaking, while we're in this kind of season or cycle of market weakness kind of under the surface. So let's take a look at that as well. Go to study, and you can do this through ThinkScript, or you could build this through the Condition Wizard. I am not a ThinkScript wizard, but I will type this out for you guys since it is a pretty simple one. We're going to say the close is greater than simple moving average, and we're going to say length equals 50, and we're going to put that period there. We're going to say SMA and close is greater than simple moving average, length equals 200 SMA. Okay. So you guys can do that with the Condition Wizard as well. That should take there. Okay. Oops. Okay, that should take, let's see. If it's not, what do we have to do? Oh, I forgot the parentheses. Ha, okay. Yeah, that's not gonna work. Okay. I told you guys I am not a ThinkScript expert, so even though that's very simple. So we're gonna go to edit here. I'm just gonna show you how I'm gonna build this. Hey guys, at least I tried. This is more of a Mike Fairborn thing. You guys know I'm better at technical analysis and things like that. We're gonna go to price close, and we're gonna say is greater than study simple moving average. We're gonna change this length to 50. Okay, so that's just saying the close, the current price is greater than the 50-day moving average. Then hit save. Wow, that was much easier, wasn't it? We're gonna add another condition. We're gonna do the same thing. We're gonna go to price close, and we're gonna select is greater than study simple moving average, and we're gonna give it a 200, and we're gonna hit save. Okay, so you guys can see Look, that's what I typed out. See, A for effort, but we're gonna click OK there. You guys can see it in there, and click OK. So we're gonna hit scan. This is gonna give us a scan of 54 stocks. So we're gonna take a couple examples out of this scan, and I am going to share this with you guys as well, just so you guys can import it. Now, this is not guaranteed for accuracy, timing, or results. It's just to be used as an example scan that we're gonna use today to search for maybe some strong fundamentals, strong technicals for some of these examples. So let's take a look at the chart of a couple of these that showed up in the list. And I know Ross Stores was definitely one of them. This is a stock that has been trading above its 50-day and above its 200-day. I'm going to put that on the chart there. And I'm also going to add implied volatility so we can see that as well as we look through these examples. Okay. So this is Ross Stores. We can clearly see, looking at the long-term trend in Ross Stores, they are in a long-term uptrend here. We can see volatility is kind of at the middle of where it's been over the past year. We kind of talked about how we didn't want it too elevated, but we also know we're going to hold this option ideally, or essentially, possibly, I should say, through a couple different earnings announcements. And so this is a stock that has definitely held its 50-day moving average for the majority of this year. And it just had this little bit of a pullback here where we had this, I touched this shelf of support. Now it's maybe trading at a little bit of a range here. And so when we typically see something like this within an ongoing uptrend, this stock may be taking a little bit of a breather before continuing its trend to the upside, since we essentially haven't seen a bend or break in the trend. It is still a long-term structural uptrend, higher highs, higher lows. So if you wanted to look a little bit further out, you could look a little bit further out in time and see what that longer term chart looks like. You can see over the longer term, same type of picture, long-term uptrend here with Ross. So let's kind of go in and talk about some of our mechanics with selecting a leap option. So we talked about how leap options are greater than a year. We've already passed the 19th of March, so we need to go further out than that to the 21st of January of 2028. Now, this is going to be 668 days till expiration. So it's going to be almost 2 years out. So let's look at the option chain on that one, and let's call out a few different things here. Okay. So if you guys will notice here, we're just going to look on the call side, because with leaps, we want to essentially simulate that stock ownership. We want to participate in the upward bias of a company without that entire cash outlay, because I do not want to spend over $20,000. We do not want to spend $20,000 with our paper money account here, because it would be too large for our trade size. So we're going to look a little bit smaller with those leap options. And if you notice here, we talked about the theta, we talked about the time decay. You're going to see that there is very little time decay, roughly 3 cents a day here on these options. Now, if we look a lot closer, let's look at the almost a month out, the April monthlies. You're going to see a lot more time decay there, almost a little more than 4 times as much on the time decay. So that's one thing. Another thing you'll notice that we talked about is that the options in the near term are much cheaper than the options in the leap options here. And that is just because we talked about having a lot of that time. Now, what we'll be looking to do with a leap option is we're going to essentially look for an option that is slightly in the money with a delta around 60 or so. And the reason we're doing that is because essentially we do want a little bit of intrinsic value. We do want a little bit of a move if the stock moves up $1, we're going to see at least the option theoretically move up at least 60 cents or so. So that's kind of what we're looking for. Another thing we're looking for is a tight spread on the option. Now you'll notice something here with these leap options, especially since it's almost 2 years out. You'll notice that there's very little open interest. There's little to no volume here, which could be a warning flag. But the first thing that we're going to look at is the spread on the bid ask, because the spread on the bid ask is going to tell you also tell you the liquidity of this market, and the spread on the bid and asks here are still with the ones that we're looking to trade within a 10% spread. So they are still tight spreads on the bid and the ask here. So the one that we're going to look at to do here is the 210 strike. That's about 5 points in the money. Another thing I want you guys to look at as well is notice that Vega on this option is rather large. So the Vega on this option is rather large, and that's just because these longer dated options are going to respond more in price to those changes in volatility. So if you do have a 1% move in implied volatility, this option should theoretically go up or down roughly a little more than $1 or so. So you'll notice a major change there compared to the near-term options. And it's just because if you look here on the right-hand side of the options chain, you'll notice that between now and the next 2 years, based on implied volatility, the stock could theoretically go up $78 or down $78 because there's obviously a lot of time, a lot of uncertainty. So you are kind of looking at that there. And I see in the chat, Rocco mentioned IV rank is 50. So when you're buying long-term options, we talked about that not being as big of a factor because you're going to hold this option for over a year. You're going to get some fluctuations in levels of implied volatility. So we're still actually purchasing it at a fair medium. So we're going to hold it through earnings announcements and things like that. So keep that in mind. We're not buying an option with a very high IV percentile, like 89 to 100. We're still finding those that are kind of in that mid-range. But essentially, that's kind of one of the reasons why we're not paying as much attention to this level here, just because we are holding it through different IV environments. So I'm going to right click on this option here, and I'm going to go to buy custom, and we're going to go with stop. Okay. And we're going to, since we're in the current market environment where we may want to take a little bit of a smaller position size, I am not going to spend our $10,000 into one trade. I'm going to take about half the size that I normally do in this paper money account. And we're just going to kind of look at some different things here with this one. Now, let's take a look at how much we could possibly lose on this option for us to place our stop. Well, we are still risking about 0.5% to 1% in our specific trade, although we are putting at risk the entire amount of the option. So keep that in mind. But essentially, we only want to put we only wanted to lose essentially possibly $1,000, $2,000 on this trade. So if we're going to try to start our price discovery at the midpoint here, which we're going to unlock that and we're going to start at the midpoint there, we can say that we are looking for a 20% loss on the downside. So not essentially looking, but we are going to place our stop at a 20% downside here. And so I'm going to take 43.25, multiply that by 0.8, and I'm going to put this at 34.60. Okay, and I'm going to make those good till canceled. Good till canceled, link those in. Okay, now you guys, I want you guys to keep in mind that with a stop market, Once it hits that price, that's when the ask price hits that price, is when this is going to trigger and become a market order. So this is still a pretty tight spread. This is still less than 10% here. But if you wanted to have a little bit more control over the price, you could use a stop limit order and maybe put the limit a little bit below the stop to have a little bit more control of the price. But again, there's risk with that one because there's no guarantee that they would get filled if a stock gaps down overnight. So we're going to use this one because we want an immediate execution as soon as the price of the option hits that price. So we're going to hit confirm and send here on this one. And essentially what we're doing on the upside, what we want to do with this one, since we're buying an option that has roughly a 60 delta, in this case a 64 delta, our plan with this one is we are going to close and roll the option when we have a delta of 80. So you can see how that 80 delta in the background, we can see that option is deep in the money. Typically when options move deep in the money like that, the liquidity kind of starts to dry up a little bit. So we would probably want to roll it at that time before the liquidity dries up in that case, and roll it out to another leap trade if that's what we were looking to do, or another short-term trade. So I'm going to put that in our long options class. Again, we have infinite upside potential. Our max loss is what we are paying for that option, essentially. So we're going to hit send. And how do we know when our delta is 80 on an option? Well, what you guys can do, right click on that option right there, create an alert, and you could just change this to delta. And you could say if the delta is at or above 80, that's when you want to get alerted on this option. So that will give us that alert. That'll give us that time that we want to close out that option or roll it out to a further expiration or further strike price. So we're going to hit create there. And I have a couple questions. Okay, I think I answered the limit one on the limit side on the upside. Do we adjust the stop? Yes, we typically adjust these stops as the price of the stock goes up. We'll adjust the stop up accordingly to keep it moving. So that's kind of what we do with this class from week to week with our trade management. So we will do that as well in this class. And then can we sell a shorter term, higher price call? Let's actually talk about that one real quick. I know that that's not typically what we talk about in this class, but if you see that price stays in a range here maybe, and you have a confirmed bounce to the downside, a trader may look for that for confirmation. A trader may look to sell a call possibly above resistance in the shorter term. So that could be an idea there. It helps finance that long leap call. But also that's only if the stock isn't in a strong uptrend. That's if the stock is in a little bit of sideways action or maybe has a minor pullback or things like that. So hopefully that helps there. Okay. Now let's move to the second one real quick, because actually I don't think we have enough time to go to this second one, but the second one that we were gonna look at, I'll just kind of show you guys an example of this one, would be Shell. So we'll kind of talk through this one and what we may do. But essentially, this stock has definitely been on an uptrend. It's still, implied volatility is still in some of the middle levels of where it's been over the past year. But I will say, in April, it gives us a little bit of skew. It skews our data a little bit, because if you guys can look at the majority of the year, you can really see that IV was really between 28 and 17 or so. And so right now is kind of relatively high. So I think this one, we may wait on this one a little bit. So it's probably good that we ran out of time today. You guys had so many questions. But this one is also noticeable or notable because it also broke out of this very long-term resistance that you guys can see here as well. It showed up on our scan and it showed up just from a technical perspective of a stock that has broken out to the upside over some very, very long-term levels of resistance. So a trader may wait for these implied volatility levels to come down a bit, but if they wanted to kind of take a little bit of a look at it, you can apply similar strategy to what we did prior, where we may look at a delta of around 60, may look a little more than a year out, and may double check liquidity, the spread. You can notice some similar things to what we saw before. Vega on this one is a lot lower actually, so a 1% change in implied volatility is going to be 45 cents, but of course this is a lower price stock as well. So that could be another thing that we could look for in the future, maybe in another one of these webcasts as well. So I see some questions. We're going to use the last couple minutes to answer some of these questions here. What is your reason for targeting stocks farther from the moving averages? So a moving average is just an average. We're kind of using that as a method in our scan to just really tell us that that stock is in an uptrend. Essentially, we're not really looking to see how extended they are from the moving averages. We're essentially looking to see if this has strong fundamentals mixed with a good technical environment to possibly give us a type of setup scenario for a leap call. So that's kind of what we're using there. Hopefully that answers your question. And then Jerry asked, do you adjust the stop daily or weekly? We adjust it weekly in this class. So typically when we do that checkup on our trades, we'll look at our trades and we'll adjust the stops. And actually, I'm glad you guys asked about that, because I think we do need to adjust our stop for Halliburton. This is actually one that we haven't adjusted our stop on yet because we had it below that level of support for quite some time. So let's go ahead and do that to just kind of give you an example of what we usually do in this class if you're new to it, to just kind of show us how to adjust our stops in this case. And you can see this one's actually getting pretty close to our rolling moment, pretty close to that delta of 80. So maybe a few dollars move, we may have to roll this anyways, but let's move up our stop. Our stop is at 850. Our limit is at 780. So let's actually move this one up right now. And let's move this up to, we're going to move this up to 1050. And let's do, whoops, we're going to actually do, we're going to do 11, see where that places us, and then let's put this at, just because the width of the spread is about $1, let's do this at 10, 10. Okay. And we'll place confirm and send again. Okay, and let's see where that shows up on the chart. Okay, so that's a little bit of a tighter stop. If this continues to move up to the upside, we will move it up even further, and this is probably the level we want to move up our stop to, just kind of showing you the theoretical level on the chart. So that's an example of how we do these weekly. Okay, I don't know if I see any other questions here, but so we are coming to the end of our time. So if you like this video, please give it a thumbs up. Thank you to Kevin Horner for just helping out so much in the chat. You guys were very engaged today, so I appreciate all of you guys, all of your questions, and please subscribe to us on Trader Talk Schwab Coaching, and then give us both a follow on X. He's Kevin Horner CS, I am Rachel CS, and I will catch you later, traders. Thanks again.